Hello guys, Adrian Jones here at Tradeology. Thanks so much for joining me today. Today I'm going to be discussing some important information that I want to share with you as regards the Forex market, news events that are coming out during the course of this week, as well as gold, what we are looking forward to with trading gold this week, and of course cryptocurrencies, specifically Bitcoin. So let's get started, and I'm going to be sharing with you some details about how to find the news and what news we're going to expect this week. So what you should see now on my screen is news calendar. And this I've taken from a site. I'm not affiliated to the site at all, but there are many sites out there that you could go to and have a look at. And I've brought up the economic calendar for the week. And one can also filter this. At the moment, it's showing me high, medium, and low impact news events. And I'm just going to have a look at, for the purposes of our recording today, the high impact news events to look forward to during the course of this week. Now, of course, during the course of last week, we had the non-farm payroll news events coming out of the Americas, out of USA. And this week, we have a bank holiday in Japan today. So not much movement expected with the yen. And one currency will be affected by these major high-news impact events later in the week, and that's the USD. Now, on Thursday, we see that Fed Chair Powell is going to be talking, and then there's going to be some important core retail sales data coming out on Friday. Now, as far as the Fed Chair speaking is concerned, not much expected there. The market, I think, has pretty much already factored that in. We're going to see that interest rates are going to remain relatively unchanged, at least in the near term and possibly through to 2023. And of course, I'm expecting there to be some announcements as to how the virus or the treatment of the virus, the vaccination rollout, etc., in America is going to affect the economy. And that's going to be an ongoing thing. It's not going to just take place this week. It's going to happen over the course of the next year at least. Now, what we can do is also have a look at the retail sales. And towards Friday, I'm expecting there to be an announcement that sales have improved. You know, the economy would have kicked in a little bit for the time of the data that they're analyzing. And so I'm expecting that to be pretty much factored in also. The main news that's taking place is actually current news that is not on any calendar. And that, as you might know by now, would include things like what we saw in America at the latter part of last week with the storming of Congress, etc. And also the Brexit deal that just came through. We'll have a look and see how that's going to influence the pound going forward. And of course, the vaccine rollouts in Europe, Britain, as well as in America. So what we do know is that vaccinations are underway currently in the States. And although it's gotten off to a slow start out, we do expect that that will be ramped up over the next while. And of course, there's a rollout going on currently in the UK and in Europe. So that's expected to take place over quite a few months still. And in the meantime, there's a battle going on with the health services in all countries, essentially, with the rise in infections and the health services being put under pressure. So these are all factors that do come in on a daily basis that news gets put out in the news media, and the market reacts to that. So oftentimes it's unexpected news. But as a technical analyst, I'm looking to see what is happening on the charts. I do, of course, still keep a lookout for high impact news events. And if there's any real significant news, market changing news, then that's something to be aware of also. So top tip for those of you who are trading around, especially the time of the calendar news, is to avoid trading at least half an hour before or half an hour after the announcements are due to be made. And the reason for this is the market can be very volatile in unexpected ways during this time. You might think that, well, the pound or the dollar might increase or decrease in value during that time. However, the market doesn't always behave very rationally during these times. So as a technical analyst, I want to make sure that we do stay out of the markets during those times, especially if you're day trading. Now, let's have a look and see what exactly is going on the charts. And firstly, I'm going to look at the pound USD. This is a daily chart that I've got up here. And I've got a few indicators on here. I've got an MA, which is an 18 MA, and also a 16 MA, and some other indicators below here, including a MACD. Now, of course, you could use whatever system you're using at the moment. And this is just for purposes of me covering the markets for the week ahead. And it being a daily chart, I've also marked off the highest point on the chart here, which goes back to April 2018, and also the lowest point of the chart here, which goes back to March of 2020. And I've simply drawn, and if you wanted to do this yourself, you'd also be able to go to your charts, insert Fibonacci retracement. I've drawn this retracement tool here, and that set out some levels on the chart. And when I look a bit closer at the chart, again, it's the pound USD. You do see, of course, that there's been a sustained increase with the pound over the course of the last few months. And one can actually see here an ascending channel that has developed, and price has hit the top part of the channel here recently, is now moving down. And what I can also see on the chart here, looking back over the last while, over the last couple of years, is that we've got major areas of support or resistance. Resistance in this case, because price is heading down. Market is bearish at the moment. So these areas here are major areas of resistance right now. And currently, you can see that price is heading down towards the lower channel line. And I do expect that the next level of resistance is going to be around and I'll try and mark it off here for you, around the current level, actually around 1.35. And should it break through that level, then it would head down further, at least towards this channel line, possibly around the 1.33 level in the short term. And overall, I'm still bullish on the pound. There's enough to support my contention that the pound in the medium term is set to rise. And what we're going to do is just keep an eye on this over the next few days. But for the moment, I'm bearish on the pound and am expecting it to head down towards this channel line here. It is still above the MAs, and it does look to be slightly overbought on my lower indicators here. So there is movement downwards, and there's still room for more movement downwards towards at least the 1.34 level over the next day or so. Now, if I was to then have a look at the Euro USD, and this is the daily chart again on the Euro USD, similarly, I've drawn a Fibonacci retracement from the highest point, which would have been in March of 2018, to the lowest point, which would have been in March 2020. And these levels have been set up here. And of course, I have also here an ascending channel drawn. Let me just zoom in a little bit for you. You can see that price has broken below that, which is a strong bearish signal, and currently looks towards heading downwards with having a look at my MACD below, as well as my other indicators here. And what we can do is expect that this level will continue down towards at least the 1.2 level, which is currently where it's at. It's just actually gone below that at the time of making this video. And then my next major level would be around the 1.206 level. And I do expect that it will continue downwards for the moment. The indicators are all indicating that this will in fact be the case. But in the longer term, medium term, I do expect it to retrace back upwards. Once it hits that level and finds resistance, to retrace back upwards again. And eventually, we're looking towards the next key level, which would be around this point here at 1.24. Now, this would take place over the course of the week to come. So at the moment, for the next day or so, I'm looking bearish on the euro and bearish on the pound. And I'll be looking out for buy trades on both of these, and the majority buy trades. Now, towards the latter part of the week, once Fed has determined the interest rates and so on, in the news I've just pointed out, I do expect that we will see the pound and the euro strengthen again. We've got a few other things happening this week also coming out of America. Of course, there is talk of an impeachment process underway, Trump, and also we have stimulus packages that are due to be announced, or a stimulus package fairly soon. And of course, we have the US presidential inauguration, which is set for the 20th of January. And all of these factors are having an influence on the dollar. At the moment, the dollar is gaining strength, mainly because the US bond yields have increased. And that, of course, means that there's more of a risk of sentiment coming into play also. So we're looking at the dollar strengthening for at least the next few days. However, in the longer term, I do see that the pound, the euro will gain strength against the dollar, and the dollar will weaken over the next short to medium term from the end of the week onwards. So for this week, as I mentioned, I'm looking out for sell trades on both the pound and the USD. And next, I would like to have a look at gold. And let's just have a look here. I've got the chart open. This is the gold USD daily chart. And you can see that there's been a sustained upward movement of the markets up until just a couple of months ago, a retracement. And I've drawn a trend line there. There is, in fact, a flag pattern type formation forming here. And gold is under pressure at the moment. As you'll see, it's traced quite significantly over the last few days, and is currently, at the time of this recording, at the $1,800 mark. However, I do see it falling down to at least the 1,770 level, and that's where it will find its next support. Now, with that in mind, I do think we should be looking bearish on gold, at least for the next few days, again till the latter part of the week, where we could see a retracement again. But for now, I'm definitely bearish on gold, and we'll be looking out mainly for sell trades. I can see also my indicators here are showing an inclination towards the bearish side. I'm very bearish on gold at the moment. Now, The other thing I'd like to just go through with you is cryptocurrencies. And this has been a buzzword for the last few weeks and months even. We've seen people such as Elon Musk coming through and saying that his new catchphrase is crypto, Bitcoin specifically, a big Bitcoin fan. And we've seen Bitcoin rise 400% over the course of the last year, which is an astronomical gain. And together with all the other cryptocurrencies, we've seen the same sustained upward momentum. The three biggest are Bitcoin, Ethereum, and Ripple. And what you can see here on chart, or the price chart at the moment, is that the markets, as at today, as at the time of recording this, are down quite substantially. There's quite big moves happening. And up until just a few days ago, Bitcoin was sitting at $40,000 and has now retraced down to $35,000 over the weekend. Now, the weekends for cryptocurrencies can be quite tumultuous, more so than during the week. And there's many reasons for that, some of which include the whales, which are the main investors in especially Bitcoin, seem to make their moves over the weekend usually. And just as a matter of fact, a bit of curiosity for you, 95% of Bitcoin is held by 2% of investors. And these investors, that 2%, hold whales. And of course, if any of them buy or sell Bitcoin in large amounts, it does have an effect on the overall market for that cryptocurrency. What we're seeing now is that currently the market is down, and that's across all the cryptocurrencies. Now, there is a lot of reasons for this, one of which is that the regulator in England has announced that they will be having harsher regulations come in place as far as Bitcoin is concerned, and warning people of a potential bubble in the market. And this plays out well if one does look at the charts. And here I have a chart of Bitcoin. And let's just go and have a look and see how it's looked over the course of the last year. And you'll see that there's been sustained parabolic rise in Bitcoin. Quite easy to see that. Huge candle movements here. And as at just the last couple of days, a massive sell-off and a retracement again. Now, this parabolic move was waiting to burst in a sense. It was unsustainable, and there were warning signals going out last week already about this. And that now has retraced down and back up again. However, in the shorter term, for this week, I'm expecting that it will remain bearish. And let me go to another chart here, just to give you an idea of why I say that. And let's just expand this chart out a little bit. And we can see the massive drop that happened over the last few days. And although it's quite hard to see it on this particular chart, we do see that there's been a retracement. We had a piercing candle form, and that did show that there would be a retracement of sorts happening. And that has now occurred. However, expecting it to fall back again. Currently, it's at this level here. And we expect it to retrace to dollar-wise around the $30,000 a Bitcoin mark. Now, over the next few days, that could, of course, change. It's very volatile at the moment. And over the longer term, over the weekly term, I do see it expected to retrace back again to around the $50,000 level. So we're going to be bearish on the Bitcoin for at least a few days. I'm only going to be looking out for potential sell opportunities here. And after that, I'm going to reanalyze and see more towards the $50 level as the next resistance level there, $50,000 level. So a lot happening in the markets. There's Brexit happened recently, and they're still trying to figure that out. Big movements on the elections recently and the inauguration coming up. Potential impeachment of President Trump. But the Fed this week, Powell going to be making a speech about possibly keeping interest rates down, and the vaccines rolling out throughout Europe, Britain, and America. Now, that is seen as a positive sign, of course. The market likes certainty, and that is giving the market certainty. And the fact that the inauguration of President Biden will go ahead on the 20th of January also creates certainty, and more certainty towards the end of the week once we get clarity around the interest rates in America remaining unchanged, will impact the markets further. So in the short term, I do see dollar strengthening for the rest of this week and then weakening towards the end of the week and into next week. And simultaneously, the pound strengthening over the course of the medium term as the vaccines get rolled out, as well as with the euro for the same reason, and as the implications of Brexit rather, become more apparent and are implemented, we should see strengthening of both the pound and the euro. With Bitcoin, as I mentioned, I do see for the next few days bearish movements, and then similar to the pound and USD, then a retracement back up towards the $50,000 level. Now, we'll see how this plays out, but that is where I'm looking at. So just to recap, bearish on the pound USD, bearish on the euro USD the next few days, bearish on Bitcoin and Ethereum for at least the next 3 or 4 days. And we'll see with my next synopsis where we'll be heading next. I want to thank you guys for taking the time to spend some time with me today and go through this. I hope it's been of assistance to you. And if you'd like to know more about trading in general, please do visit the link below or in the description that accompanies this video. And I'll be speaking to you very soon with more insights into the market. Thanks for watching.